Hello all and welcome to RiskScout's webinar, Dust Off Your BSA Program, Spring Cleaning for AML Success. We are so excited to have you joining us for this session. Now, before we do dive into today's webinar content, let's run through some quick housekeeping items. RiskScout will be sharing all of today's webinar resources in a follow-up email first thing tomorrow morning, so be sure to keep an eye on your inbox. You can access all of today's webinar resources, including a copy of today's slide deck, in the top right corner of your webinar interface now. We also want this session to be as valuable for you as possible, so we encourage you to ask any questions that you might have throughout today's session for the Q&A portion that we'll have at the end of the webinar. We will be running a few polls throughout today's webinar as well to better understand you all, our audience, so your participation is greatly appreciated. Now, in case it is your first time joining us, RiskScout is a team of BSA professionals and former bank examiners helping financial institutions prevent fraud losses and protect their communities while improving profitability. We've built the platform we wish we had to fight financial crime, focusing on reducing manual work, unlocking new deposit streams, and ensuring regulatory compliance, all without needing to increase your headcount. By leveraging our deep industry expertise, seamless data integrations, and intelligent automations, our comprehensive BSA, AML, and fraud platform empowers bankers to do more with less so you can focus on serving your community. If you're interested in learning more, visit riskscout.com and get in touch. The myths are back, and they have infiltrated every corner of the BSA galaxy. In this follow-up to our fan favorite session, we are hunting down the misconceptions that distort examiner expectations, warp program decisions, and leave compliance teams fighting battles that they just don't need to fight. From regulatory misconceptions to outdated assumptions about technology and AI, we're exposing the myths that have survived for far too long and are giving you the clarity to move forward with confidence. The force has always been strong with your financial crime program, so it's time to stop letting bad intel lead it astray. So be sure to register for this free webinar today, which you can find a link for in the chat right now. Today's webinar will be led by Kristin Parker, RiskScout's Senior Vice President of Compliance and Operations. Kristin is a seasoned expert in BSA, AML, and fraud prevention with extensive experience building and implementing monitoring programs for high-risk industries. She has contributed to significant updates in the FFIEC manual, provided practical and risk-based AML guidance at industry events, and played a key role in the development of RiskScout's innovative and actionable BSA and fraud solutions. Kristin is also recognized by her peers as PBC's 2024 Compliance Person of the Year. We are so excited to have her joining us today. And without further ado, Kristin, I will throw it over to you to dive into today's content. Take it away.
Thank you, Ethan. I'm really excited to be here with everyone today. We've got a lot of content to cover, so I figure we would just go ahead and dive right in. We are all in the midst of that spring cleaning time. It's, you know, that, well, if you're in North Carolina like I am, it is just the moody March we always get, where it is 80 degrees on a Sunday, and then 2 days later you have 3 inches of snow. But all that to be said, I've got the itch to clean. I've got the itch to purge and to look at everything around my house and say, you know, dust off everything from the winter. And that's what we're going to do here today and talk about with your AML program. So the goals for this session is all around helping you get sharper, helping you get smarter with your BSA program. We are, as BSA teams, oftentimes a little bit buried under what we believe to be the truths of what we have to do every day based on stuff we've been told over the years. So this whole goal of this session is to really uncover what's new, what's happening, what we're hearing in the field, what's really actually going on. We're going to also just kind of, you know, dust off that old FFIEC manual and the new updates and memo guidances that come out to say, what's new? How should I refresh my program? Put a new layer of paint on that. And then, the elephant in the room being AI and where it is appropriate to utilize it in your program, and then what you need to do from a consideration standpoint for that. And then just a general spring cleaning checklist. That was always helpful for me when I was in your chair to say, these are the things that I should be looking at least on an annual basis, if not more often. So with all that said, the slide deck is available for you. There's a lot of content. There's a lot of verbiage on some of these slides. That's not usually my style, but I wanted you guys to have this as a takeaway for you to be able to reference back to. So I'm not going to, slide deck you to death and read every single line. This is designed to help you have a good, solid takeaway to reference back to as action items for you to consider doing. So when we talk about current events, we're going to start with the BSA landscape and what's shifting fast. And I thought about 4 different things that have come out over the last 6 to 8 months to a year that I think are pretty relevant to you guys. So just a quick overview of at the level, and we'll dive into each of these here in slides upcoming. There was some OCC BSA relief and tech mandate that came out from them. There was a huge $80 million fine that came from FinCEN and a couple other agencies related to BSA that we're going to dive into. There was SAR rule clarification, or lack of better term, a clarification, as I like to put it in quotes, because it did confuse a heck of a lot of people, including myself. A little contradictory language in there, but we'll dive into that a little bit. And then the CDD relief that came out. So let's go ahead and dive into the OCC component here. I like to know and note to everybody that we know that not everybody is regulated by the OCC, and that's completely fine. Everybody has, every agency has its own kind of thought process and priorities, all that ultimately all adhere to what their mission is as regulators in accordance with the FFIEC manual and other regulatory statutes they have to follow in their role. But I like to just preface and say the OCC is usually the guy that starts first, the guy that starts the change first, that is. Whatever they tend to do, most folks and other regulatory agencies in the leadership tend to follow. So it's good just to always have your eyes on what the OCC is doing, because a fast follow, and fast in regulatory speak is not always really, in number of weeks or months or years, but not very long after the OCC in that context do the other regulatory agencies typically follow. So when this came out, it was designed at community financial institutions. It was designed to help relieve some of the traditional BSA issues that we ran into at community financial institutions. So if you guys remember, I spent most of my career before I joined RiskScout in community financial institutions. And what happened a lot of times in those BSA spaces is you felt like you needed to check every box under the sun for BSA. But we all know at community financial institutions that not everything that is in the exam manual that the examiners and auditors are looking at you for BSA necessarily applies to you in your situation. You may not be offering these certain products and services to higher risk industries, or you may not be doing these certain activities that larger institutions do that present more risk to their BSA program, right? So the whole point in this memo guidance was, or in this relief that they have provided, was to say and iterate that it is a risk-based approach that we want you to take. And that risk-based approach is not a just cookie cutter, one size fits all for every institution. And now, while that's been kind of said over the years, this is really putting it, the pen to paper and saying this is really true in what we believe now, and how we're going to reflect that in our examinations of you. So they're moving away from the checkbox compliance and saying, did you do this, and this, and saying, what is the actual risk the institution has? And what is their exposure, and how are they actually covering that risk? And so that risk coverage may just look different from institution based off of who you're serving, products and services offered, so on and so forth. You're really only going to know, and they're only going to know, if you have that coverage for understanding what the real risks of your institution are from a BSA perspective, if you thoroughly do a comprehensive risk assessment, which we will touch on later on how to achieve in this webinar. They really did put an emphasis. This is the very first time I've ever seen them really put an emphasis on allowing you to rely on technology. They really are endorsing technology for the first time. You know, for the longest time, it was, you know, we can't tell you whether or not you do need a software or not. And they really kind of are sticking to that sentiment a little bit. But if you read through this guidance that came out, or this statement, these statements that came out, they are really emphasizing the fact that they want you to be relying more on that, because there's so much human error that can happen. There's contingency planning issues that can happen if you're doing something on a manual basis or a system that is more outdated. Then you may not be actually covering for the risks you think you're covering for by following those. So they are putting more of an emphasis on that technology, but with having technology comes responsibility for understanding that your technology is really covering the risks that you believe it is covering. They also de-emphasize the high volume SAR filing in favor of accuracy and effectiveness. So the SAR filings, oftentimes we always believe when in doubt, file a SAR, no matter whether it made sense or not. And remember, the SAR filing requirements are still very, very low for the world we live in today. So anything $5,000 and greater is the typical rule of thumb that you need to follow for filing a SAR. That means a lot of SARs are showing up in law enforcement's queue to look at that just are not valuable. So they really want you to take the time to be smarter about what you are filing about. We'll talk more about the SAR relief here shortly. And then a mandate to modernize, which means upgrading your legacy BSA processes, really taking a good look at your program and saying, what are the risks compared to how the world works today? What are in regards to the emerging risks that we're seeing, the FinCEN priorities, things like that, and seeing if you have the actual coverage to cover that. And then, you know, the largest fine I've seen, I think ever, maybe I'm mistaken here, came in the form of an $80 million fine. Now, this is not a financial institution, but it doesn't mean anything out. It should not lessen the issue for you that it wasn't a financial institution, because it was still related to an AML program, and it's still, the largest fine did come down from FinCEN. And there was kind of a thought last year when the administration changed that maybe some of the BSA priorities would change and shift and maybe lessen some to an extent. But that certainly has proved to not be the case, because we are still seeing significant findings in BSA AML programs, and they continue to actually get larger. This was a record-breaking penalty. They had issues for about 6 years. They had been warned, and they had been warned, and they had been warned. Should they have been allowed to be warned for 6 years? I don't, you know, that's a fundamental issue, an argument we can make otherwise. But they were obviously at least going through the motions of trying to make effort to an extent that made the regulators feel comfortable enough to allow them to continue to operate. But in the end of the day, they really got fined for two things: the technology and staffing failures. They had a program that was unreasonably designed, and I had unreasonably designed surveillance tools that was not there to actually look for the suspicious activity that they should be looking for with their business model. They failed to ultimately file 160 mission critical SARs that really based around, you know, Russian oligarchs and other things along those lines. And they were actually ended up with over $100 million in total fines once FinCEN and FINRA, who they are regulated by, added their fines up together individually. So that's just, all of this is to be said is not to scare you, just maybe saying, okay, while the OCC may be easing up some regulatory burden, it doesn't mean that the focus of BSA has gone away. The expectation is that you still have a strong BSA program. It's just their focus is more around what is a reasonable BSA program for the risks at your institution. Okay, and then October 2025, FinCEN confused everybody with the guidance that came out around 4 SAR assumptions. Really, that they were trying to say they were clearing the air to lessen the SAR burden, but yet all the sentiment I got from not just fellow bankers and fellow technologists in this space, but also from regulators themselves, was that this was very confusing and contradictory. Not to only what we've already always operated on, but in the guidance itself, it was a little contradictory in its language. So the FAQ 1 on the document mentioned that essentially we don't need to be filing structuring SARs like we have been historically. So transactions near $10,000 is what most institutions, if there's looks like to be indicative of potential structuring, we would always file a SAR. They're saying that doesn't have to be the case. Only required if there is actual reason to suspect structuring. Proximity close to $10,000 does not necessarily mean they're structuring. Now, that's a very hard line to draw, because we've all historically said if it looks like structuring, it smells like structuring, it's structuring, so we should file a SAR. We've been criticized in the past if we haven't done that. But they are clearing up the fact that if it's a one-off situation, maybe it's just your next door neighbor who's just scared of thinking they don't want the government to know about this transaction, and it's just a one-off situation and it never happens again. That is what they're implying we not need to file a SAR for. Maybe they sold a car, they got it paid in cash, they put it in, it's near 10K. That's the one and done. Nothing else surrounding it is suspicious. That does no longer require a SAR, according to that guidance that came out, or the FAQ that came out. And then frequently asked questions 2 and 3 are the ones where people got mostly confused because they were a little bit contradictory of themselves. 4 kind of follows suit on that, but post-SAR reviews and 90-day refilings are mandatory is what bankers have always assumed, and apparently neither is required. The 90-day cadence is a suggestion, not a rule. Financial institutions can rely on their own monitoring risk-based instead. So they are saying that we do not need to be filing reoccurring or doing 90-day reviews or filing to file a reoccurring SAR. That is not a requirement, but that is a risk-based decision on our part to do so. And I feel that is a very gray area that we should be cautious of, because all the regulators I've been speaking with are still following the sentiment that you should be doing your 90-day reviews to see if the activity has continued, especially if it's one that wouldn't typically be caught necessarily in your day-to-day monitoring process. Sometimes the only way to know if it's continued is if you have suspicion, or if you do a review to confirm your suspicions that activity still has been occurring again. So really a risk-based decision there. I'm always happy to talk offline with people about what I've seen other financial institutions do, but that's a hard one for me to say, yeah, you don't have to do those anymore because they don't say you need to. I don't think this frequently asked questions has made it all through the regulatory agencies as something that they have adopted. So I would urge you to caution there. And then the frequently asked questions 4 says you must document, what bankers assumed is that you must document every decision not to file. They say no documentation is required to file, or that we don't have to document anything. Now, that gives me a lot of heartburn because I grew up in this BSA space career-wise. If it's not documented, it didn't happen in our space. This really contradicts a lot of what their other guidance says, which is you really do need to document what your rationale is behind things. So again, something very cautionary I would remind you about, to say, just because they say it here, there are reasons that we need to document outside of just saying we want to if we don't document, how are we going to defend ourselves against our peers, our auditors, and our regulators for a decision we made? We run so quickly in BSA, we do so many things, we wear so many hats. Why we made a decision on something at some particular point in time could be an issue later on, or come up later on and people wonder why you made that decision. If you're not documenting why you made that decision, how are you going to know? So it's not just only for the good of checking a box for regulators, it's also good for your own memory. Come on. I mean, we do a lot of things. We're all getting older. We need to be able to help jog our own memories for the decisions we made, so we can always have a defensible reason for whatever that purpose was for our decision at that time.
Hey, Kristin, we had a few questions kind of echoing the sentiment of, this is a little confusing. In the meantime, would you recommend that folks continue to kind of maintain those no-SAR logs that they might be keeping until they have a chance to speak with the regulator?
Yeah. And we'll talk more about that towards the end of the kind of recommendations for handling this in your policies and your procedures going forward, so that you're not necessarily having to pigeonhole yourself to that if that ultimately does get adopted longer term. But yeah, no, I would keep things business as usual, because I'm not seeing or hearing from any of my financial institutions that they're not being asked for that documentation still. All right. Then in this past February, we got some CDD relief. This one is welcome. We like this because it did not confuse us, right? It said you don't have to validate beneficial ownership every time you open a new account. You validate, and if it's that legal entity customer that requires beneficial ownership and it's their first time opening up a relationship with you, then yeah, you need to be validating that beneficial ownership information that first time. And validating, I mean collecting, right? You only have to technically validate if you have suspicions that there might be some issues there. But now, in the past, you used to have to, if that person, even on the same day, or that legal entity customer on the same day came and opened up another account, they would expect you to say, oh yeah, check this box, here's a new form to revalidate that, right? But that's not the case anymore. You can still rely on that original one. The only time you need to re-verify is at the first time of account opening is the first verification, and re-verification is when reliability of the original beneficial ownership documentation comes into play, or if you have risk-based procedures written or in your policy or your procedures that say we do collect this beneficial ownership information based off of X, whether it is you still want to collect it every time they open a new account, or if your policy says every time that we do a new CDD or EDD refresher, we refresh that, then you still need to follow that, because that is part of your board approved policy. And that is the one that ultimately your examiners are going to come in and say, are you doing what you say you are doing in accordance to your board approved policy? So that's a welcomed relief from that side. Beneficial ownership's never been anybody's favorite subject or responsibility of BSA. It's always never sat well. So any relief we can get there would be welcome. Okay, and then it's always important to just refresh everybody on the FinCEN priority areas. Now, I know this says 2021. It is a fun fact to learn that every 4 years, FinCEN is required to update their priorities, and they're late this year. So we did not get any in 2025. We have yet to see any in 2026, but that doesn't mean that we won't see them sometime in the near future. So just keep your eyes peeled and subscribe to the FinCEN updates so that you would see that in your inbox if it does actually come to fruition that they do update it. The ones published in June 2021 are around corruption, cybersecurity and fraud, human trafficking and human smuggling, drug trafficking, terrorist financing, virtual currency, things along those lines. While we didn't get new priorities, we at least did see some of the current priorities elevated. So there's really a focus around that cartels and fentanyl trafficking. That there has been some good guidance that have come out from FinCEN on what to look for, kind of typologies and things along those lines. And as a direct result from that, institutions have been filing SARs on those subjects to the tune of about $1.4 billion. There's obviously some Iran issues of late, and that has elevated the Iran's sanctions. And so you'll want to ensure that whoever your provider is for helping you look at and monitor for OFAC that they are considering. Maybe you do a test name or something like that to ensure that if are certain individuals or businesses that are associated with that should be blocked. You would want to be able to run a test name to ensure that's blocked. So that's something that maybe you should consider doing. And government benefits fraud. So in Minnesota, some unfortunate Minnesota financial institutions are now required to report in certain monetary instruments and other transaction purchases that happen to help the government identify potential government fraud in Minnesota. So we've been working directly with our financial institutions, helping them through that reporting requirement since it rolled out for those that it does apply to. If your provider has not reached out to you, or if you don't know if you're affected, if you're in Minnesota, that is something that, you can absolutely reach out to us and we can help you figure out whether or not you fall into that requirement of what you should be reporting into the government on a monthly basis. And the priority should always be something that is helping drive your program decisions. Now, because they don't update every year, that can be kind of hard, especially as how fast the world moves anymore and what changes. So just keep them in mind as you work through your risk assessments, your policies, and your procedures. Each priority typology should be considered as an inherent risk factor with a documented rating. So when you're going through your risk assessment, we'll talk about inherent risk here shortly. It's not something you have to specifically call out in your risk assessment necessarily, but you should be thinking through how does your transaction monitoring system relevant to the risks your customer or member base presents. How are we covering for these priorities so we can make sure if we are asked about it by our regulators, we at least have something documented that we thought through those particular priorities. You don't necessarily either have to call it out in your policies either that these are the types of typologies we're looking for, but some people do in their policies, and that goes over well with your regulators and showing that you're really looking and considering what is the government's priority right now and how your customer base is being monitored for that. And your staff should be able to help identify, maybe through your BSA account opening questionnaire, certain targeted questions to help them identify if some of these business types or occupations could be more susceptible to the risks of those priorities. So that's something that maybe you should consider asking targeted questions. So, if somebody does fall in a certain occupation or serve a certain client base, maybe you do want them elevated first, either prior to onboarding or at least have them on your radar so you are monitoring them more closely for activities that could be suspicious. And then especially important is in your SAR narrative training or your SARs that you are writing and you're training for your staff for writing your SARs. You always want to call out those priorities. So if something does fall into one of those priorities, in your first sentence or two, you want to say that you have a SAR that is you believe you have suspicious activity that fits one of these typologies. And they use keyword searches a lot when they are looking for SARs, they being law enforcement. So that helps bubble up those particular SARs that maybe not necessarily would be looked at, maybe because they're lower dollar volumes. If you're using really good SAR narrative language, your SARs are more likely to be looked at, which is refreshing because we don't want to just be writing SARs to go into a black hole. We want them to be able to be useful to law enforcement to help detect suspicious activity. This is a shameless plug for a previous SAR wars that we did a couple years, I think it was probably last year or the year before. We did a good webinar on just kind of the basics of writing a really impactful SAR that's a good one. The new webinar that's coming up will even touch on that even a little bit more, and how to be impactful, and other things Ethan mentioned as well will be included in that. It's a really fun webinar to listen to and walk through too, because BSA can be a little dry and people don't always like to be writing stars, but if you can add a little color around it, it really helps kind of bring to light the why behind what we do in our BSA roles.
Excellent. Well said, Kristin. That brings us to our first poll question. Now, Kristin did walk us through a lot of those FinCEN priorities, and candidly, some of them are a little tricky. Some of them are as basic as fraud. Some of them are as complex as corruption or multinational crime syndicates. So we are curious, which FinCEN priority area do you find to be the hardest to address at your own financial institution? Whether that's baking it into policies and procedures, coming up with practical monitoring methods, whatever that might look like. And maybe it's not even one of the ones that we listed here. Maybe it's other. We'll give you all a couple moments to get your responses in before we flip these around. Excellent. Looks like we got most of our answers in. We actually have a pretty decent spread showing up here. So you should see these results on your screen. Most folks on the call agree that the cybercrime and virtual assets are the hardest one to track. Now, that could be crypto and beyond, cybersecurity issues. Corruption, trafficking, and other kind of falling in that next category. Lowest being terrorist financing and that transnational criminal activity. Kristin, how does this stack up to what you're expecting to see based on all the conversations you have day in, day out?
Yeah, this aligns with what I hear all the time. It's like people are very concerned about the priority of over, cryptocurrency and assets and monitoring those, because it's hard to monitor. Everything is very anonymized in that space. And how do you know that when your customer is utilizing or benefiting from any type of like Bitcoin transactions, or is that legitimate or is that not? That's hard to do. There are ways to tackle that. I'd be happy to talk about it, that we could always do a webinar on it, but there are definitely ways that you can do that and not be a huge burden to your institution. The other ones are sometimes they're just hard. All the subjects we have to monitor for can be difficult to monitor for, and that's why you need really intention-built software that is there to help you monitor those effectively, and not just have a whole bunch of noise coming at you that ultimately is a waste of what our ultimate goal is, which is to find the bad guys and help report on them.
Well said. Yeah, let's talk about what we're hearing in the market, Kristin.
Yeah. Okay. So I was thinking about 4 different things I continuously hear, either from examiners themselves, or from our own customers or prospects that we're talking to. A lot of when we are I tend to do a lot of the work with our sales team on the demo side, just because I've had my cheeks in the seats doing the job before. It's helpful to have somebody who speaks that language speaking to you and understanding truly what your problems are. And a lot of times when we have institutions roll in, that have been previously either on manual systems or maybe more legacy older systems, we're talking to them because their examiners have said things around about the adequacy of their program, right? And so that, there's a lot of potential pitfalls in manual monitoring. There's a lot of pitfalls in technology that is either not right for your institution, not right sized for your institution, or it's just older and it's maybe just more of a reporting system than it is an actual true monitoring system. So we do see that quite a bit come in from that side. The SAR quality over volume. So I talk to institutions that maybe file 1 to 2 SARs per year, and then I talk to institutions and I have customers that file 1 to 2 SARs per hour, right? So we serve all sorts of different asset sizes here. What I like to do as part of kind of the nurturing part of who I am and what we do in our customer success team is really understand from a SAR volume perspective, if it is really low, do you really have the monitoring in place that you really need? Is it really high? Are you just doing it to check boxes, or is it meaningful? Because either way, you could be scrutinized by your institution, by your examiners, and we are hearing that. Risk assessments are Always a hot topic, right? I've never met anybody who loves a risk assessment. We can all just say that the elephant in the room is it's a lot of work, but nothing tells a better story than a risk assessment. But most of the time, they're either inadequate or they are just not been touched in years. So we'll talk more about that in just a second. Staffing and resources always is an issue too. There's all sorts of reasons for staffing and resourcing issues. Either you don't have enough staffing, or maybe they're allocated to the wrong priorities, things along those lines. Again, if we look back to that $80 million fine, that really boiled down to staffing and technology, with staffing being a big portion of it. It's not just do I have the enough people, it's do I have the right educated people in here that actually know what they're doing. Or is my BSA officer just somebody who drew the short straw off the teller line and got the BSA officer hat, and now they're just like don't really know how to do that job well. So that's really important to them, that you don't just have bodies there, that you have trained bodies there.
All right, that brings us to our next poll question. Before we dive into our next section here, we want to understand, when is the last time your institution did a formal review to update your BSA AML program? We're not talking about a casual rule update. We are talking a deeper dive. You're really getting in there, dusting those baseboards, and doing a deeper clean here. Those options are everywhere from the past month to over the past 2 years. We'd love to hear from y'all. All right, y'all are quick on the draw here today. So let's go ahead and turn these results around. All right, looks like we've got a kind of a bit of a bell curve going here, with the majority of the responses being in the past 2 years. 40% of folks have done their last deep dive review about 2 years ago. 21% past 6 months, another 21%, they're just not sure. Maybe they're new, maybe it's been so long that the memory is so distant. And 12%, good on you, y'all, getting a nice jump there on early spring cleaning by doing that in the past month. Kristin, I know we see, folks do these at different cadences. As that majority that we have on the call, those 2 years, is that pretty typical?
Yeah, I would say, a big formal review where you're doing, soup to nuts review, it's every 2 years. I think that's reasonable enough. I think with the priorities that have, or the memo guidance rather, that has come out the last couple of years, it's probably prudent of those people that haven't done reviews at least in the last 12 months to take a look and start plugging in some of that the guidance that's come out, to at least update some language to give yourself a little bit more wiggle room. All right, let's talk about all of our BSA programs from day to day, as we don't look at it, can have dust on it, right? Because guidance changes. We may not even have looked at our what we're monitoring in a while, why we're monitoring it, and what settings we are to monitor them. And examiners are expecting more out of us, because guidance has shifted to say we want to take less of a burden, we want to take more of a burden off of you. It's almost like it's shifted expectations that they want you to think more thoroughly about what your risks are and not just go through a check the box motion. It's all about building a defensible program, right? It's always about what is reasonable and achievable for what your risks are at your institution. A defensible program meaning it is one that you have thought through all of the products and services and you offer at your institution, what you are wanting to do from a strategic perspective as an institution. Who do you want to serve? Who do you not want to serve? And everything that you have thought through needs to be written down and defensible. Every threshold, everything that you've decided to monitor, not monitor, those things, you need to document it, because you need to remember what your rationale is, but more importantly, you need to show that it is well thought out.
Hey, Kristin, sorry, before we move on, we did get a question asking, this kind of documentation, is that something that should be very formal, or can it be more of a casual, like a running Word doc that I just kind of pull up when my examiner comes to visit?
You know, it's okay to keep a running Word doc, but you'd want to formalize that into something that is easy for your examiners. So think about yourself in their chair. They're going to a lot of institutions to examine things. The cleaner you can provide them your why behind your decision, the quicker they're going to help understand it and not have to piecemeal certain decisions together. So you need to have it more formalized so that they are pinning you down less to ask additional follow-up questions, and that they can show that you are really well thinking this out and it's not just something you're thinking, putting your thoughts on the fly about, if that makes sense. When there are guidance changes or regulatory updates, it's always really important to consider reviewing your program, right? In this past year, we haven't really had any regulatory updates, more that we've had guidance updates. So anytime you have any guidance update, it's good to go and look at your risk assessment and kind of have a moment with yourself to say, does any of this affect what we are looking at all from a risk assessment perspective? And if it is, then should we be updating some of our thought process behind how we evaluate that risk? But we should also be, if it's not in there, we need to start including it into our risk assessment. It's also time for you to look at your policies and procedures from that perspective. Is our language too strict here? Is there something that we could loosen up? Is there something missing from here that we need to add it in? Those things like that. And then always ending up to say, okay, now we've evaluated our risks, what the guidance and requirements are. How are we actually putting that in action with how we're monitoring these things? Again, I know risk assessments are not fun, but there's nothing that will tell you more about your institution than a risk assessment. They don't have to be painful. We actually have a risk assessment document that I've just refreshed and will be coming to you via email in your follow-up with us. So it's something for you to, you don't have to use it, but it is a good, say, if you already have a risk assessment, say, are we covering these things as well? I tried to make it as user-friendly as possible for you guys so you could just kind of plug and play as you go along to help you think through those processes. You're going to need to have, after this call, a talk with yourself about when was the last time my risk assessment was updated. Take a look at that document that you're going to get and say, was it thorough enough too? Because just a handful of questions is not going to tell you the whole story. Does it also reflect your current customer mix? You know, as your customer or your member mix change based on products and services you offer, maybe expansions, acquisitions, that is all stuff that affects how the risks to your institution that you need to evaluate to say, does our monitoring cover for those said risks? Back to monitoring, you know, it's all about what is the inherent risk we have, what is our mitigation plan, and what's the residual risk after our mitigation plan. If the residual risk is moderate or high, you've got work to do, right? And so that's where you really need to put pen to paper and be thinking about how can I, based off of the technologies that I have today or the processes and the people I have today, start to help cover those risks that I've identified. And then always document in this area, because that's part of the rationale that you'll need to say, have a defensible program. Policies and procedures are kind of, I think of risk assessments as a living, breathing document. I never let it sit for 12 months, right? And I never let it sit there and fester and change. I was like, okay, oh, we've added this new ACH product. Let's go change. Let's add that in here. And it didn't have to necessarily be formal, but at least I was taking notes in there so that as I formalized my formal risk assessment that I would ultimately hand to upper management and the board, then I didn't have to go back and try to remember what happened over the last 12 months or bother a bunch of different departments. Same thing should happen with policies, right? There are some things that just require policy changes right out the bat, but most of our policy cycles end up annually on the board's lap. So we're only looking at policies, procedures, living and breathing document as well from that side of things, because a lot of things are going to slightly change and tweak as you change and tweak your processes But these are some good tips for what you should be updating or consider updating in your policies based off of the new guidances that did come. So just take a look at this when you guys get this deck in your hand to assess what your policies or your procedures say today. I am always an advocate for not over-engineering your policy, because if your policy is big and robust and it says you absolutely do these certain things, you're not giving yourself enough wiggle room. There is still a little gray area in some of the stuff that we do. So keep your language broad so that you're not ever pinning yourself in a corner and ultimately accidentally violating your policy because it was too strictly written. So keep your language broad in there. And these are some suggestions from that side. So some things I would suggest you do this quarter is look around your SAR conversion rate. So this is something how you can kind of determine whether your monitoring methodologies are really working. If you are on a rules-based or a monitoring program that uses rules to help you look for suspicious activity, you'll want to consider looking at those and saying how many of these are actually converting into any cases or SARs. So your alert to case to SAR ratio always tells a good story to say if there needs to be tweaking. This is a weird time of year because there are a lot of tax payments and tax deposits, tax refund deposits that are happening. So maybe you wait until next quarter to do that assessment so you can get a better grip and understanding on what is really true, because we're seeing a lot of some volatility in alerts that are coming through that aren't normal just because people are getting abnormal deposits or making abnormal payments that they wouldn't normally do. If you decide to not look for certain suspicious activity or not turn some rules on in your system, you'll want to have that documented. If a rule is available to you, doesn't mean you need to turn it on to look for suspicious activity. You don't need to have every rule on in every system all the time. It's all risk-based, but I want you to document why you just chose to suppress that for your examiners. And then it's always good to do peer-to-peer comparisons and benchmarking against your peers on what they are looking for. We do that with our financial institutions. We do meet with them at least every quarter, sometimes every 6 months based on their availability. And during that time frame, we like to take an assessment of their alerts, what they have turned on, and make suggestions for them on kind of peer-to-peer comparisons too, so they have that documentation to help further defend their program. Confirm that your risk assessment drives your monitoring. Again, a thorough risk assessment is going to say, this is my inherent risk. Ultimately, this is my residual risk. Based off of what you're ultimately saying from a residual risk perspective, you really better be able to back up what you're saying in there. If you're saying, no, I don't have any, my residual risk is very low, then and you better be able to prove it. If it is moderate or high, time to, again, put your pen to paper and make sure that you are, whatever you say you're doing in that document to mitigate your risks, you're actually doing. And then again, document all of your rationale for any type of thresholds that you have unchanged. So let's say you do an alert review and you're looking at your rules review and you're looking to see what you have turned on. If you even have the ability to change your thresholds, some other systems are more kind of like a black box approach, so you don't really get to see the nuts and bolts behind it, but we're more of a glass box approach from our side, and kind of we work with our institutions to tune their systems to whatever their risks are. You know, when we work with our institutions, and then let's say we did meet with them on our quarterly or semi-annual basis, we want to help look at those rules. If nothing needs to be changed, we just need to document the why so that they have something to go by there. So just remember, as you go through these practices, everybody's got different systems. Just take these away as a takeaway for you to go through. You know, a well-tuned system means that your rule has purpose. You don't just have a rule turned on for the sake of having a rule turned on. You've got rationale behind why you have it turned on, why you have the thresholds that you do. Again, that alert to case to SAR ratio is important, why you tuned it, and why you didn't turn some alerts on. Document from there. You'll want to leverage real data to tune your program, analyze your alert to case to star ratio. How are you segmenting by transaction behavior, if at all? Is that enough? Sometimes it is a pitfall if you are depending on segmenting your customers or monitoring them off of information they provided you at account opening, like, oh, my customer told me this is how much cash they should expect, wires, ACH, so on and so forth. If your monitoring system depends on what your customer told you and is saying and only alerting you when something differs from what they told you, your system may not be enough, because it's a hill I'll die on, that information you collect from your customers at account opening for volume dollar activity is 99% of the time wrong, right? And it causes us a lot of false positives. So we have a different approach at RiskScout, so we don't run into that issue. But just know that you really need to be thinking through why you've chosen to monitor your groups the way that you have. It's all about documentation. And then have some type of regular cadence and look back review that you can assess that the rules you have on are effective. Take this away as well. I won't read you every line here, but I want you to consider when you do have a monitoring system turned on, these are signs that your monitoring system does need attention. And then on the right side are ways for you to consider improving those. AI is something that is an elephant in the room for a lot of people. There are things to consider. Just know if you are using AI, it should be written into something in your policy state on how you utilize it. You shouldn't be using open AI or anything like that. That is just like putting your customers' information out into the world. That's not safe for your institution. So just know that you should have rules over that. And then from an AML perspective, what AI can help you with is, smarter monitoring. It can help you with risk scoring better and help you really streamline your investigations if it is built into your system with intention, and there's a way to step into that. But just know that with AI comes responsibilities. So regulators are still expecting, if you are using AI, that it's explainable. You know why your AI is making the decisions it is making. You need to document those AI decisions. It requires the same rationale, and there still needs to be a human in the loop for those AI decisions.
Excellent. And we are curious at what AI has looked like at your financial institution so far. So you should see a question coming up asking, is your institution currently leveraging AI tools or features in your BSA program? That can be anything from yes, adopting it very heavily, all the way down to no, we're not using it, and we also have no intention to. Looking at these results already, I think they're quite interesting. We'll give y'all just a couple more seconds to get these in. All righty. Thank you for all those who responded. Looks like we've got a pretty good split here. Almost half of our folks either are using it between heavily and slightly, more on the slightly side, and then another half are in that no, we're not using it, with about 21% of our audience today saying they have no intention of using it down the road. Kristin, does this surprise you at all?
No, I hear it all over the place. Either people are just, baby stepping into it, or they're anti-AI, and I respect all parties and their opinions in that, because it's a shift from what we traditionally trust in them as BSA officers, right?
Well said. Well, let's get to our final checklist here.
All right, so I want you to take this away. Again, you've had a lot of words thrown at you on this slide deck, but that was important for you to just kind of take it as a working list. The BSA Spring Cleaning Checklist. I want you to start with risk assessments. I will preach that to the day I die, that you need to make sure, and you need to learn how to love a risk assessment, guys. You just need to learn to love to hate it, essentially, but it is important for you to help you with that rationale. CDD procedures, you need to be looking to make sure that your procedures align with what the new FinCEN expectations are, so you aren't overdoing things around the beneficial ownership part. SAR policy. You can remove that mandatory language, but I would still suggest that you still can continue to do it. So don't pin yourself in a corner to have to do it in case something slips up in your program and maybe one slips through. But remove that language, still do it. Transaction monitoring thresholds is, I want you to take a list, of what you guys have today. Look at how it's performing. If you're just getting a lot of noise for the sake of getting noise, we need to tune that. We need to look at tuning that and getting that sharper. Staff training records. Make sure your staffing adequacy was a big issue for a lot of institutions. Not just from the number of bodies there, but are the right bodies there and are they trained? So make sure you are not just training your BSA staff. Make sure that that's obviously very important, that they know what they're doing, but the rest of your staffing, it has to be kind of a trickle-down effect that everybody has the culture of compliance at your institution. Technology and vendor review. Does your AML program that you're using today actually support what your program goals are from a risk-based decision? And if not, then that's something maybe you should consider reassessing.
Excellent. Well, that does bring us to our Q&A. As a reminder, you can find the questions up in the top right-hand corner. We'd love to respond to any that you have, and even if we can't answer them today, we'll be sure to follow up with you after the call. In the meantime, we will be throwing up one final poll question, just giving y'all the opportunity to get in touch with us here at RiskScout, talk a little bit more to Kristin, better understand our solution and beyond. So if you're interested in reaching out or getting in touch with us after the fact, this is a great way to let us know. Kristin, we did have a couple great Q&A questions come in. One of them about talking about those peer benchmarks you mentioned. Do you have any recommendations where folks can find those kind of peer benchmarks for their own solutions if they don't know where to find those?
If in your whatever solution you're using should have some type of advice on the peer-to-peer. They should be able to provide you with something that says, we're seeing your peers do this. And so if your provider does not have that, that's something for you consider asking as an enhancement request.
Excellent. We had another one come in saying, when a new guidance like the CDD relief comes out, should we be baking those changes into our policies and procedures immediately, or should we wait a while to see how it settles? What would you advise there?
No, for that one, that can be right away. That is what it is. Nobody's arguing whether or not the SAR one, that's a whole different ballgame there. But this is very black and white of when you need to be doing it from the CDD side.
Excellent. And then just as a reminder, folks, that we had a couple of folks ask if the recording will be available, if the slides are available. Yes, absolutely. All of those things will be hitting your inbox first thing tomorrow morning. Excellent. Well, that does bring us to our time here today. Of course, our mission is always to take the BS out of BSA. Hopefully we were able to do that to help y'all out a little bit. And I do want to say thank you not only to our audience for joining us, but also a big thank you to Kristin for not only taking the time to share her expertise, but building the slide deck, pulling all this information together is no small feat, and we're very, very appreciative. Like I said, keep an eye on your inbox. We'll be sending out the recording, the slides, and the additional resources like that risk assessment template that Kristin referred to. All of that will be in your inbox first thing tomorrow morning. And then we also will be having a brief survey following today's webinar where y'all can give us a little bit of feedback, request future sessions, or if there are any questions that we weren't able to get to during the session, we'd love to help you out there. So thank you so much. If you want to learn more about RiskScout, if you have any additional questions, or if you want to say hi, you can always find us at riskscout.com. And we hope to see you on our next webinar. Kristin, thanks again. Greatly appreciate it.
Hi, guys.